This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights the week of April 17th through the 21st, 2023. We began the week with a warning regarding the pending expiration of Comex options, not just for silver, the current front month, but also for gold, where you can plainly see, and you can see it on this chart, that there is a vast disparity in open calls versus puts above the $2,000 level. This gives a very perverse incentive to the banks to get price down below $2,000, maybe even to $1,990 by the time we get to option expiration at the close on Tuesday the 25th. We issued this warning on Monday. By the time we got to Friday, it certainly seems prescient. Didn't know that for sure on Monday, but that was one of the topics that we discussed that day, and I encourage you to listen closely. June gold is the next front month. However, based off of the June gold, there are options that will expire next Tuesday, and here they are. And wow, look at how many of these there are. Why did gold get the shit kicked out of it the last couple days? Well, a number of reasons, but look at how many calls there are at 2060. 4,044 versus 186 puts. 2050, 5,449 versus 576. Do you think there is some incentive and remains in some incentive for the banks to drive price down at least to 2,000, where there's 6,200 calls versus 2,200? And then finally, looking for a sweet spot, it's in here around 1990, 1985. Let's just keep an eye on that and then not be surprised if gold closes somewhere between 1980 and 1990 next Tuesday. You may recall from last week's podcast highlights that the break in gold that was manufactured last Friday the 14th led us to think we're probably entering a temporary situation of weakness, consolidation, maybe all the way into early May. The chart sort of betrays that as well. That was all part of what we discussed Tuesday, the 18th. Gold on the same 4-month daily chart. Again, here's what I'm watching. Now look, on the little trend line that it's been following now for a month, gold almost held it as support yesterday and then got back above it today. That's encouraging. Again, though, in the circle there, you can see what happened back in February. As the dollar plunged, gold broke, and then it flagged for 3 days, 3 straight green candles. You see those after the 2 big red ones? And then as the dollar rallied, it eroded away. That's why we'll watch to see what the dollar does now. The dollar falls back. Okay, a little false rally here. Falls back now below 101.50 and toward 101. And oh my gosh, even makes a new low versus last week. Then gold's going to surge back above this thing and start making a rally back toward the all-time intraday highs near 2080. But if the dollar rallies, then gold's going to kind of do a little mini version of what it did in February. All right, we just don't know yet. In the short term, the key driver as to whether gold will bounce back, whether silver will rally back, or whether they'll both fall and consolidate, that key driver is probably the dollar index, and the dollar index doesn't know what the heck it wants to do next. Is it going to break down below 101? Is it going to rally toward 103, 104? You figure that out. You'll have some idea where the metals are headed over the next couple of weeks. Anyway, that's all part of what we discussed Wednesday the 19th. Notice on the dollar index, I gave you a different line today. Look at what had been resistance on the way down November into February. If you continue that line down, look at that, acting as support for the last month. Giving me more, just slightly more confidence maybe that the dollar's going to rally from here. Again, let's see what it does tomorrow with the data and the goons. But it sure looks like it wants to rally to 103, maybe even 104. And if that happens in that mini February type scenario we've been discussing, the metals will remain under pressure. Under that mini February scenario, which we've been discussing at TFM Metals Report for about the last week, we wonder if maybe the chart won't kind of look a little bit like February 2, that big sharp breakdown, followed by 3 or 4 days of consolidation or flagging, as the technical analysts like to say, and then just a steady wash lower for a couple of weeks. Well, we'll see about that. We'll see how it plays out, but you can't help but notice the similarities in the charts That's one of the things we discussed on Thursday the 20th. Our look at gold. Again, all I put on here is just drawing your attention after the first break in February, how it flagged sideways for 4 days, and then the dollar started moving higher and gold washed out from 1900 down to 1840. What are we doing here? The first break last Friday, and now we've kind of flagged sideways. Will we then, if the gold, again, how many times we talked about this week? If the dollar does rally over the next 2 weeks, into maybe the next BLS Friday in 2 weeks, then, 103, 103 and a half, if that happens, then gold will probably follow a pattern like February. Maybe not wash back $80, but wash back 40, back down to, somewhere between 1960 and 1980. Again, it's all going to depend on what the dollar does. And on Friday, April 21st, we end the week where we began the week. It was all the way back on Monday that we warned the members of TFMR, we warned our Twitter followers about the pending option expiration for next Tuesday. A full 7 trading days later, that option expiration had a clear sweet spot on the open interest chart near $1,900. Now, if you want to know more about that, go back and listen to the Monday snippet from this particular podcast recap. You can also go to sproutmoney.com, where in the Insights column, you'll find an article I wrote back on Tuesday explaining all of this and how it works. Well, anyway, as we go to wrap up the week here on Friday, it is playing out just as we thought it would with 2 days to go. Price of Comex gold was smashed overnight in London. It then rallied back, only to be smashed again right into the London PM fix, that last wholesale price fix until Monday. 3 p.m. London that happens. On the chart you see here, 9 a.m., the very lows of the day. So not only did the banks rig a low price for the fix, they got price back under $2,000 and kept it there all day. You can be almost certain they will keep it below there through the Comex close and that option expiration next Tuesday. Thank you for listening to the TF Metals Report podcast highlights. Again, a daily podcast summary where we discuss all of this stuff is just part of the benefit of being a TF Metals Report subscriber. $15 a month is all it costs, 50 cents a day. Do you think you could use information like this option expiration stuff? Yeah, you probably could. Be sure to check us out, tfmetalsreport.com. Have a great weekend, everyone.